Hi, Fauzia.
How are you?
Okay.
How's your hubby doing?
Oh, he's doing better. We're
Yeah, yeah.
trying to get him to move around.
Oh, good, good. Well, I'm gonna go just get a glass of water. I'll be right back.
Okay.
Hi, Cindy.
Hi. What?
Hello. I'm just gonna check. Sometimes people send messages on Facebook and I'm never checking, so I thought I better go check.
I don't know why my videos. Oh, there it is.
Oh,
There we go. Hi, Cindy.
Hi.
I guess the time confused a lot of people because I normally do it about an hour after the markets close, but we had to accommodate Mark's schedule and a couple of other people. So I I hope we get, I'm always concerned that people will forget. Uh-oh.
Here comes somebody.
Wonderful. So we have six now. Everyone's talking about zero GTs, like they're the soup du jour. Soup of the day.
Hmm.
Go ahead and add in any questions that you might have so that they can get addressed earlier. Hi, Mark.
How's it going?
Going well. Are you back in the US?
No, I'm actually in Turkey right now.
Oh, yeah. Where? Istanbul?
Yep, I'm in Istanbul.
Yeah, it's beautiful. Are you planning to spend some time there?
Yeah, I'm gonna spend 4 full days here, so planning on doing quite a bit in Istanbul. This is like my little more adventurous solo traveling, and
Oh,
then I'll be heading to Australia, and then I'll be doing a Tony Robbins event.
is
And
this your first visit to Turkey?
this is my first visit to Turkey, so
It's
this
very
is
nice.
my first visit to a Muslim country, I guess, if that's how I would categorize it. But I kind of wanted a more broader sense of stuff, and I like
Good. Yeah,
it.
yeah.
Yeah,
Oh, you
so
have
like
to go. You have to go to the Blue Mosque and you
Yep.
have to go to the Hagia Sophia across the, I've been to Turkey multiple times. And then tour the Bosphorus if you get a chance. There's a boat ride. That'll be
Yeah, I've heard the nighttime boat ride's really good, and then I'm also I forget what it's called. It's not like there's like caves outside of Turkey where they fly the
Yes,
balloon. I
yes,
forget what it's
yes.
called, but I think I'm gonna go
And,
there.
and I don't know if you have enough time to go to up to the coast with the Black Sea. That's a very popular place now.
Yeah, the Turkish Riviera. I've heard good
Right,
things.
yeah, it's very popular for retirees from that
Right.
side of the world. Yeah, that's great. So, oh, and then Australia, and when do you get back?
I get back to San Francisco October 6th.
Oh, nice long trip.
Yep.
Yeah, great, great. Well, let's see, we had 15 sign up, but a lot of people got confused with the time, they said. Because normally when I do my Zooms, they're around 2 o'clock PST, but we had to accommodate some time zones. And so a lot of people got confused. But anyway, we're making a recording so we can share it with them. Yeah. I don't know. Annie, should we wait about 10 minutes before we have Mark start? Annie,
Yeah,
yeah.
I think I'm surprised that we don't see Carolyn and some of the other people in
Yeah,
the
I know that I checked on Facebook to make sure, and there were 15. So, and Sally from Australia. So anyway, it's their loss. I mean, we have a recording, but it's never the same as, here we go, Dorothy comes in.
Not worth your time to imagine what would happen because I'm 100% sure it's not going to happen this way. Then, yeah,
Was that someone listening to Mark?
Mhm. Dorothy.
Yeah. Okay, so Mark, we've been doing, and we've got lots of questions.
It's been a little bit of the Wild West. A lot of big
Yeah.
ups and downs in the last
The
month.
month of September has been tough, right? Totally. Up.
Yeah.
So some of us have adapted your strategies by actually rolling out instead of letting the good till cancel or the stop
Mhm.
limit execute. And that's worked. So, but we're not keeping track at that point of the transaction costs. It is what it is.
Yeah, I mean, certain ones like the Friday put, I definitely think you could roll that out. I don't really think that's that
Yeah,
weird.
yeah.
It's
Friday
like,
puts have been perfectly fine.
yeah, Friday puts, and then the calendars and some like the gap the past 2 days,
Was
that
too
would have,
much, right?
yeah, it would have roasted the call side on the calendars, and then the all in open, it hasn't really triggered much, which is kind of like a testament to the filter of
Yes,
it
yeah.
of late, which is good. But that one, I mean, they're trading small, but I made some other ones. The EMA Power Hour one has been doing pretty
Oh,
well.
okay. Well, I'm gonna pay attention to
Yeah,
that one because
that
I
one's
didn't
done.
quite understand it. But oh, Sally's here. Hi,
Good
Sally.
morning.
Good morning.
How are you?
I know, I was wondering. I was
Short sleep.
I was talking to Mark about our Sally's in the group. We've got kind of a loose WhatsApp group going and we talk. And we often break the rules, even the all-in rules about should you or shouldn't you. Sally in particular loves to. But you got saved today, didn't you?
I did, although I had to stay up quite a bit of the night nursing it. But last night the rule was in though. It was a go last night.
Or was it last night, but not
Yes.
this morning?
It was the same. Sorry,
Oh,
last
was
night
it?
is the morning for me. Sorry. Yeah.
But to make a long story short, Mark, it's been lots of fun. We've had a lot of fun. And Mark's got a couple new strategies, so that'll be good. But hey, I think, should we start? It's
Yeah.
5
We
after. Yeah.
we find it stressful sometimes too. We're sitting there, crossing our toes.
Yeah, but he agrees that he agrees that the month of September has been awful.
Right.
Yeah.
Well, that's good. So perhaps better to come. Anyway, thank you.
Well-
I'll go quiet.
Okay.
Yeah, well, good news is this is exactly what you guys should be experiencing. It's kind of part of it. I view one of the most important parts of trading is building conviction. I like to say building conviction because it's not so much you following the exact strategy or optimizing it to the nth degree. It's more that you have the conviction to follow through with it and you're enjoying it enough that you want to basically continue to trade what that is. And a huge part of that is emotionally feeling it because certain trades you may not just like it sounds like for you, staying up, in the middle of the night, nursing a trade, maybe you don't want to roll and just have a stop loss and you can go to bed or something. But certain things like that, where we think about what works best for us. Like personally, I really like power hour because I only need to be kind of worked up for like half an hour, which just makes the rest of my life much better. And I, found strategies that seemingly worked very well for that. So I think that's an important cornerstone. And then also kind of an important factor too is when stuff gets really good, we'll often size up quickly and get larger faster. But having the clarity of kind of just what we're trying to do, and also, you guys traded through a pretty tough period and it did decent. So give yourself a pat on the back that we've gotten to that point with it as well and what that looks like. So I'll kind of open if you guys had any specific questions or maybe we could talk about experience. I could, walk through some strategies, but I'd like to relate it to me.
I should add here, Mark, that everybody else outside of Annie and Sally and myself is new to you. And I did send them a link to all of your YouTube videos. I thought it would be instructive for them to preview them. Hey, ladies, could we have a couple of faces? Like I have all dark boxes here. And so feel free to start from the very beginning. Don't assume that what you've already shared with us is something that the others know about.
Yeah, I mean, I just kind of open it up. It's like, what do you guys know about zero DT options, or kind of what around options has gotten you to a point where you've decided to want to trade them and attracted to you? Like, are you believers in the options? We can make money no matter what the market does, and whether it's up, down, or what happens. And I know the process of doing that can be, um, liberating and difficult at times, but the path there is, very exciting. And kind of what I like to say is, ice cubes melt at 33 degrees, but not a lot. You can't see the progress when you go from 0 degrees to 30 degrees, but you're getting there. It just hasn't quite gone over, that ledge. And it's like, I was in the same seat you guys were. I started interacting with Fauzia and trading and found everything on Tasty Trade and was working through all this. And I'm just a couple years down the road of where that is. And I'm trading options for a living now. And it's good. And I still enjoy it. And it actually is much less stressful now that it's just one thing that I'm doing. And it's my only source of income because it's just a different way of contextualizing basically what you're doing. So I'd like to hear if you guys have any specific questions. I specifically do zero DT. I like it. I like the no overnight risk. I think it provides a lot of benefits of compounding and just ability to learn fastly through repetition. And it's kind of exciting and you can make a boatload of money doing it if you're good at it.
So why don't I start with whoever's here, Cindy, just go ahead and tell Mark what you know and what you're interested in. We'll spend a few minutes going around so he has some context.
Hi, I'm fairly new at the options. I've been dipping my toes in it for a couple years now. I've maybe done one zero T DTE maybe 2 years ago. So I am interested in it because I like the immediate gratification. I don't like waiting. So that's why I do a lot of earning trades because it's immediate.
Exactly. Another thing too is zero DT is I think we've probably had experience trading individual names is index vol, especially shorter duration index vol is like very accurately priced and it's easy to do the trade small trade often, make your lot of occurrences. And we can get the benefit of being naked synthetically with buying 5 cent wings on an iron condor or put spread. So we're really capitalizing on a lot of that volatility risk premium, but we're not taking all of that overnight risk. And we can also size it pretty easily for our account, maybe just risking $200 a trade or something as well.
Okay.
Yeah. Lisa, do you want to go next?
Sure. So I've been trading since 2018, just part-time. I still work and I had more time before I started a bookkeeping business. So I've been kind of busy now. I try to catch the trades from the research team with Tasty Trade and follow some of those trades or play some of those trades. I've liked reading Tammy Chambliss's work, kind of follow her on the different Facebook groups. I like having a trade. I would really love to have a tool in the toolbox for every single scenario, whether the VIX was up or down, whether the market's going up or down. Most of my trades are longer duration, but I have done zero DTEs. And we say, I know you've got a specific strategy, I think, but so many people are doing all different strategies on, just the zero DTE. So I just watched a part of your video last night to try to see what we might be talking about today. But yeah, I'm interested to see what you're sharing.
Yeah, and that's the other thing too that I like you bringing it up is it's like no matter what the environment is, and by sizing things in a way, or like we know the market goes up over time, like it makes sense to have 20% of your money in SPY. It makes sense to run 45 DT puts on an index or an individual name. Then it also makes sense to have some trade that just runs for the last 2 hours of the day, and that can provide a lot of entertainment to keep you engaged. And it can also provide income. So like Tammy, we used to proctor a zero DT trading group and stuff. And it's like, Tammy's been doing the same strategy for 2.5 years. I think she just added one and she has a ball doing it. She like skis and does it and everything. And it's like, that's an income trade in a campaign, which is like great when you get into it more. And I think everyone should eventually get to that point, but we'll also work on smaller trades. And I did make a campaign trade basically today that we can look at, which I think will be a good add to the portfolio as well.
Perfect. Dorothy, do you want to go next?
Well, I haven't been doing very many zero DTEs. I did a few of them a couple of years ago, well, in 22, and everything seemed to be kind of a failure in 22. So I kind of gave up on them. So I'm certainly willing to learn and listen. And I did watch some of your videos the other day. So I am kind of really interested in what you're doing.
Yeah, we're going to get prepared to have our trades and profit regardless of what's going on. We got a good thing going.
Oh, and let me just interject here. So a couple of us here had a special Zoom with Mark a few weeks ago, and that's what brought him here to us, to this group. And we've been deploying his strategies and really enjoying it. I think on the whole, successfully, would you say, Sally? Yes. So if after this you decide, you're welcome to join our group. It's a WhatsApp group because of Sally, who's in Australia. And we've got his strategies on a Google spreadsheet. So we'll just add to it whatever he tells us new today. And then welcome to join our group. Okay. All right. Sorry.
Oh, I watched that video. Yeah.
Oh, wonderful. Wonderful.
Yeah,
So
I watched that. Yeah.
you go ahead, Joy.
Hi there, Fauzia. You may remember that we walked in Brookline several years
Yes.
ago.
Yes, I met
Yes,
you.
So I'm here to learn. I did do some zero DTE trading from, I'd say 2020 to 2023. And I do enjoy it. I found that I was spending an awful lot of time in front of my laptop. And this past year, I had to sell a house and move, and I've just not been able to do any of the zero DTE this year. So, but I'm here to learn as well.
Very good.
Okay, and Dawn.
Hello, thanks for doing this, first of all, and thanks for your time, Mark. This is great. I started trading like a lot of people in 2020, and I had a decent amount. So that combination I felt like was the worst thing you could have done, is have a decent amount of money and think, oh my gosh, this is great. Why didn't I know about the stock market before everything went up? So since that time, so it's been about 4.5 years, and I feel like most days it's been like 2 days because I try something, doesn't work, try something, doesn't work. And recently I'm like, I don't think I should do it anymore. So I've been wanting to hang it up for a long time because it just hasn't been working. And then I stumbled across these advanced options and Tasty Trade. And I'm like, oh, maybe this is the path, like this. I'm just trying to find the path because I love every bit of it and I don't want to quit. And I'm hoping that I find something that makes sense, that I'm not losing so much, that just makes sense, right? Like I realize now, maybe before I thought I was going to be a millionaire in about a year, and it's not going to happen. But how do I make $100, $200 a day or something like that, So I just want a system so badly, and I'm hoping that this makes sense. But I have to say that advanced options to me are hard to understand. I don't know. I don't know if one day it clicks for everyone or how you understand all the different pieces and parts, but that's one piece that I also want to make sure that I learn and study and understand them a little bit more easily.
Yeah, I think a big thing with that is a lot of people in finance or options like to use big words and talk about math and almost kind of sound more entertaining, but at its core, I like to say everything's a vanilla option. Like it's a combination of a protocol, and they basically will mean, anything. So some things, it's like if I ever get confused, I just like repeat. It's like short puts are bullish, short calls are bearish, and it's like bears splash down, bulls, perk up. And it's just like when you say that, it's like if you're in the money on a put, like you're losing. If you're out of the money on a put, like you're making money. And if you just kind of repeat those basics, you realize that all of these like funky names, condors, lizards, and whatever, it's like they're actually very simple. It's like you can have risk on both sides, you can have risk on one. And like at its core, I honestly almost all just do puts and credit spreads, or at least managing like that, because the less complex the orders are, the less slippage there is, which not only gives you more edge to make money, but it also reduces the complexity of it. Like the simpler things are, the better it is. It's just getting to the point where complex things seem simple, basically.
That's great. That's great. Thank you.
So Francine? Hello? She's muted. I'll go to you. I'm sorry, your name, Cynthia? Hello? Okay. Yeah, would you have, Mark wanted to know just a little bit about your experience with zero DTEs.
No.
Would you like to share it?
She commented in the chat that she's
She's
has
got
kids
kids around
around her.
here. Okay, got it.
Yeah,
All right,
no
Mark,
worries.
go ahead, start. Yeah, so I just want to say that the part that truly converted me, because I always thought zero DTs required babysitting and all of that, was the fact that there isn't a lot of babysitting required.
Why?
So go ahead. Yeah, I muted that. Go ahead, Mark.
No, I mean, you can check it a lot, but when you're orders in, if you're managing a stop loss, like it's gonna go through. And SPX is liquid, that it's always gonna happen and it goes through. And like mentally, losing money helps you make money, and trading smaller because there's such drastic compounding actually helps you get there. And the learning experience to it is just much quicker. It's just when we're using these numbers, and I'll be like, hey, I've been trading this, I do this at 100 lot or something, and it works fine. Just don't trade it too big. Is that when we have that in place, it's pretty easy to follow through with confidence. And then when we started at kind of a trivial size, it's not a big deal, and you'll just get a little more comfortable with it. So I don't know if there's any maybe specific trades you want to chat about that we looked at last time, or I
Yeah,
can
just
kind
go
of
through them all. I think the all in at open, just the ones you did with us. Yeah.
That would be really good to just go over them again, because you know, a couple of times we had slightly different opinions of what the rules were,
yeah.
which made it a little bit easier to break them if everyone thought their rules were different.
Feel free to stop me at any point. This gets too complex. Okay, so all in at open. As you can see, this has a pretty robust edge over a long period of time. And in regards to this, you can see that this year, you know, it's struggled a little more, but this is why, you know, we've had a lot of big moves between the open and 1030. This is just what's occurred this year. You can see that also happened in other years like 2020 or 2018. So it's not necessarily a concern to me, but we just know basically what that looks like. And this year, it's all come from the call side. Just that's kind of been the reality of what it is. So in regards to this, this is technically a condor because we have both sides in the trade. You know, we have a call side and we have a put side. However, even though we're using the same buying power, we're going to manage each leg separately, which is the put leg and the call leg. And the reason we're managing it separately is because oftentimes, I can probably find a stop loss here, but so here was a stop loss. It happened at the opening price was 53.67 and the closing price was 53.14. And then our short call was at 54.80. So it was $150 out of the money, or roughly, you know, almost 3% away when the put got stopped out. So that was probably marking at 5 cents, if anything. So if we were managing the entire thing as a condor, when that hit a 4x stop, we're just going to eat 10 cents of slippage to pay $2.50 of commission to close out a $5 option. That clearly doesn't make sense to do. So that's why we're managing each separate leg. And the reason we've also, you know, skewed this $1.75 and $1.25 is because implied volatility is richer on the put side. So when we're buying a 50-cent long and we're selling a $1.75 short, this 50-cent long you can see here is 55 cents on the put side and 35 cents on the call side. So we're actually selling $1.25 of volatility risk premium on the put because we sold 175 and we bought a 55. And on the call side, we sold 130 and bought 35. So that's why we're collecting more on the put side, to kind of make that a little more delta neutral. And then we know we're going to be a little bit further away on the money. So like expected move wise up or down, that's kind of balanced out. So I kind of view this as a more efficient way to basically trade a strangle that actually makes us delta neutral based on the dynamics of the market. And you can see this year and every year, the put has about a 30% premium capture. And for you that are unfamiliar with premium capture, basically what that means is if we sell $1 of premium, that's $100 in premium that we collect. And if we have a 20% premium capture, that means we expect a value, a positive expected value of $20. So every $100 of premium we sell, if we use the mechanics over 30, 60, 90 days, we should expect to keep $20 of that. So that mentally is kind of a good way to think of it, is like, sometimes I lose. This trade has an 83% win rate. So if you have risk on both sides, you basically need to know that, you know, roughly out of every 5 times you're going to lose once, which is part of the making $20. So you're going to make 300, make 300, make 300, make 300, lose 900, and then you're left with 300. And that's kind of the nature of the trades. And sometimes you lose 900, and then it takes 2 weeks to get back there. And sometimes you hit 5 in a row and it kind of goes up. But mentally, we can look at this back test and you know that we sell $1, we keep $20. And that's kind of the nature of the trade. So the other thing I want to point out that I think some people are confused about is this filter that says VIX on, move down, max of 0%. So this basically means, did the VIX open higher than it closed at 415 yesterday? That's what it means. It's communicated a little weird because it's maximum move down of 0%. So that's would mean it contracted overnight. So the VIX closes at 415 and technically it opens, I think, at 3:15 in the morning, the futures. But we're looking at that 932 print. So if you're on Tasty and you basically see at 9:30, there'll be no VIX print. It goes illiquid at 9:15 and then at 9:30 it opens and then it doesn't print until 9:31, sometimes 9:32. It's very easy to basically tell if it's going to open up or down. If you want to, take it because it was close either way, it's not going to be a huge deal. But over like 0.5% down, the expected return really starts to get nuked on this. So I would definitely avoid in that situation. And I chose this trade because morning wise, drop the kids off at school. This could be a good trade that you just look on. You put this stop loss in, you set it, forget it. Selling another put at like 10:15 if your call side is like above, 2x stop. I don't think that's bad. I actually kind of like that mechanic. I wouldn't do it on the call side just because the call sign kind of lags. Yeah, what do you got, Fauzia?
When you say sell another put, do we close the previous short put out, or right?
So I would prefer not to do that because
Okay.
if you went from $1.75 to, let's say, 30 cents on that
Right.
put, so that is probably at like a 2 delta now. So you're going to be paying $1.70 in commissions and maybe 5 cents of a bid ask. So it doesn't really make sense to do that. Whereas adding another put, you're selling that premium, you're most certainly going to win on the put already there. It does take another $5,000 of buying power, but in an uptrending day, I know personally for me, mentally, it's kind of tough to lose money when the market's up. So that's also kind of nice. But the put has about twice the expected results of the call. So it's often nice to do that. Honestly, with this trade though, I would recommend just putting it on and forgetting it is kind of nice. The other thing, and this is kind of curve fitty, but since you guys are a smaller group of people with not as large of accounts, I think it's worth showing you this. But on Fridays, weekend effect, we've talked about it last time. This could be kind of a nice little opportunity. Whereas if you look on Friday, I'll run this back test for you guys live here. We'll just go for 2020. But if we look at just the put side on Friday when that VIX opens up, the other weird thing too is the VIX almost always opens down on Fridays. It just doesn't happen that much because this is kind of the dealers positioning themselves for the weekend. But when this finishes, you'll kind of see this trade normally has a 20% expected return. And if we were to only trade, oops, I need to delete the call. If I deleted the call and we only traded the put on Friday, it's actually pretty nice. So maybe you trade a 2-1, like 2 puts from the start and 1 call on the call side on Friday. Could be another potential example. So just at the start you did it. And this is kind of just the nature of 0DTE. It's like 33.5% premium capture. So for every dollar you sell, you keep $33. You can see that, this year, it's been 3.94%, took a 2.9% drawdown. Didn't really work last year, but this is just one side and you can see that edge is, relatively robust, or maybe instead of doing the Friday trade that I know we showed last time that you take all week, you decide to do this because you don't want to hold it over the weekend, could be another example of what you could do. But see, it's a pretty nice P&L curve. You know, it went for the better part of 2 months, just printing money until it lost, which is always cool. Is there anything specifically on this trade, or does that kind of make
Yes.
sense? Yes. What do you got?
Can you just explain how you calculate the stop loss, just to make that really clear for us? We think we've got it, but I wouldn't mind it explained.
So the stop loss is net. So I'm targeting like the closest to 125. So I may collect 135. I may collect 110. So if I were to collect $1, I would be buying back my order for $500 because since I collected $100 in premium, if it's at $100, I haven't lost any money because that's how much the market deemed I should collect to hold that risk. So it's net of what it is. So it's always going to be, if you collect $100 and it's a 4x stop, you'll just take 5. It'll be 5 and it'll be times 5. So you buy that order back for $500.
Yep. So normally we collect about $300 for this trade because we know 175 and the 125. Right. So our stop loss is going to be 5 times 3, so 15.
No, it's
No,
only
or it's going to be plus.
Yeah.
So it's not actually a 500%. It's actually a $500 stop loss. Yes.
It's what the risk is on each individual side. So you'll see that I have the call side here and we have a $400 stop loss. And then I have the call side here for 125. Then I have the put side here for 400%. And then I have the put side here for $1.75. So it's the 4x stop, $100 to $500 on that side. So each side is managed individually.
And do you do
Right.
the stop loss on the spread or just on the short?
I have it on, if it's 50 wide, you should have it on the spread
Right.
because right at the market open, we'd be losing basically $55 off the start. You know what I'm saying?
Right.
So, you know, if it's close, I'll probably change it to just the short in the last hour because we don't want to be trying to buy back an order that's at 0.5 because that's just, we're just getting slippage for no reason. But at the open, you definitely want to have that. Usually it's not really a problem. It doesn't make much of a difference. Slippage is relatively the same unless it's a really quick move right off the open. So yeah, I do have it on the spread.
So
Personally, I trade these much wider, but yeah.
if it gets stopped out on one side, do you do anything about the other side? Close it out or no, just leave it?
Let it go to expiration because the thing about it is if we close out something for 10 cents, we're paying $2. Like you can see here that the average per trade. So this is basically saying for every trade, we expect to make $28. So if you're buying back that order for $10 and you're paying an extra $3 in commission, you've just given away half your edge. Like the edge in 0 DTE is actually smaller than it is in other expirations, but the leverage is so huge because you can trade spreads and the compounding is massive because you trade every single day. Your time velocity of money would be the banking term is very, very high. So it's just simply executing and let the compounding playing out. Like it's a mathematical fact that, you know, if you take a 5% drawdown, you need a 0.5% return to get back to even. So you need 5.5% to get back to even. But if you're compounding daily, and if you've ever been in credit card debt, that they're compounding your debt daily, unlike your mortgage, which is yearly, the benefit from like 20% compounding each day is like 7, 8, 9, 10 times more beneficial than just that little drag of 50 basis points to get back to even. So that's really the game at its core we're playing is the compounding, but you don't have to wait 30 years. You know, if you've ever seen that curve where it's like, you save this much money when you're 27, when you're 70, you're going to be a millionaire. It's like, cool, I don't want to wait till I'm 70. You know what I'm saying? Where it's like, if you can make $100 a day on a $10,000 account and you made $100 every single day for 250 market days a year, you would do 125% on over 2 years on a 10 grand account. But if you did 10 basis points a day, which would be the initial value of that $100 a day. Over 2 years, you just went $100, $101, $101.21. You would have 252% return over that same 2 years. So you doubled your return with doing nothing but just, if this is 10% of your portfolio because you have a 50 grand account, when your account grows to 100, you put it to 2. That's all you would have to do to just double your account again. And that's a mathematical fact. That's not some trick, some whatever. We're just experiencing that compounding much faster than what happens when you wait till retire at 60.
So this average per trade is average over how many? Is it a year?
Over 1,735 trades.
Okay, okay.
So another way to think of the average per trade is the expected value. So if you have $100 of premium that you sell times X, your product of that would be the expected value. So basically every $100 or every time you execute this trade, which is roughly $300, you're making 28 bucks. And that's a good way to kind of mentally think about it when you have losses as well.
Ah, okay. So the losses are factored in there.
Yes.
Yes. Okay.
So you can see also here's like the average winner, which obviously makes sense because these are cheaper trades. 125 and 175 is $133, and the average loser is $511.
Okay.
And going back to closing out the other side, this trade gets double stopped roughly once a year. So over the course of 8 years, it's been double stopped about 6 out of 8 years, which would be the call side and the put side. So you're like, why should I close this out at 10 cents? You know what I'm saying? And so 2 out of 8 years, it didn't happen. 6 out of 8, it happened. And it basically happens once a year, but you're giving up half of your edge if you're paying that $10 plus commission to close out that 10 cents option, which clearly, mentally, if we're looking at the long run. So that's an example of like profiting your profit taking yourself to go broke. Like by you taking off a winner early, you're going broke because you just took this risk. And when it's clear you have like astronomically no risk on a winner, you just mentally are trying to massage yourself that you're like, I won today, whereas you're actually making a mistake. And the analogy that I kind of like to give with this is like, we all make mistakes and we're eventually going to figure it out. But it's like, if you guys had a kid and they like started walking and they fell 5,000 times, would you just be like, well, he's not a walker? I'd be like, I guess he's just not going to walk. You know what I'm saying? Where it's like, no, you're like, this kid's walking and we're going to like cheer him on and get him until he goes walking. It's like, that's kind of what the options is. So if you do this mistake because you didn't know, it's like, it's not a big deal. The real key to zero DT, since we trade every day, is not the fact that you don't make mistakes, but the fact that you don't beat yourself up and that we just come back and learn from our mistakes. Because I'll talk to a lot of people that are like, I've been trading for 50 years. I did this. And it's like, all that really tells me is that you haven't learned from maybe your past mistakes, or you're still learning that same lesson to advance, where we could advance along these iterations if we could just be honest with ourselves and we can go forward. And like some thing that I like to do is every day after I trade, I like to write down what went well, what could I improve on next time, and kind of what's my plan. And like humans naturally do well for like a 6-to-1 praise to correction. So I always like to be like, I learned this, that I shouldn't take my profit take off, and I'll write 6 things out that I did well or frame my mistakes in the positive before I write, okay, this is what I'm going to do tomorrow. And then you just feel a lot better about it.
That's so important to emphasize because we've been doing this for about a month now, and it's really hard to see that winning side sitting at 20%, 20 cents, and not take it off. I've had to fight it, and I've had to fight others to not do it, so I'm glad you're emphasizing that. It's really important. And these are not durational trades. So some of those rules about it's a winner, why leave the risk on, doesn't apply because
I'll show this to you guys also. Yeah. So like we'll make a copy of this one. And then, so this is the exact same parameters right here. And this is the whole point. Like we're just being curious. So we're now going to put in a profit take order at a closing order of 20 cents. So we're gonna mechanically buy it back at 20 cents every single time. So we will never have risk, and then we'll see what the results are. This will take like 2 minutes to run because it's running 1,800 trades. But when we make decisions, we make emotional decisions, and emotional decisions are good because they're our North Star over what we're doing doesn't feel well. Like I still pay attention to that, where people are like, oh, don't be emotions. Like, no, emotions are what make us human. And like that gives me a good barometer to if I'm trading too large is usually what that is, or if something's incorrect, or I haven't done enough work on a strategy to basically have conviction in it. So that was a curious thought, buying it back at 20%. I've had the same thought. However, I have tested this, and this now gives me conviction to doing what I can. So we can see here that we made $47,000 trading one lot, all the same trades and parameters. We had a 20% premium capture. So let's see if we make 47 grand and we have a 9% drawdown of our very, very worst in the depths of 2020. Again, this could take a minute because we're running a lot of trades. But okay, so it comes here, and now we have $34,000 versus 47. So
Big difference.
13 grand is the compounding, and you can see on average now we're only making $20 and instead of 28. And this did reduce our drawdown, so it went from 9.6
9.3.
but it reduced our drawdown by roughly 10%. So you guys are right, it reduces your risk. However, by reducing your risk, you lost 25% of your profit, going from basically 6% to 3%. So now that we know this, when we're looking at that 20-cent option, would we even hesitate to potentially take that off? And you could be right that one day. I don't doubt that. And how I like to relate that is there are some people out there that are talented. They have a great feel from the market. That's not really what I'm trying to do. I'm just trying to show up every day for someone, and I'm trying to generate a consistent income. It's not going to be the coolest highest flying tech stock income on anything, but we know that over a sample size of 1,800 trades, trading every single day like a robot since 2016, we're giving up 20% of our upside for basically a rounding error of protecting our downside. So we probably don't want to do that. But it's good that we've now tested this and we have a little more contextualization around that.
Can we do the 7 DTE next? That's a quick one. Yeah.
Sorry, Mark, I apologize that I'm just wanting to get this detail really correct. The stop loss, then you've got two sides. Approximately one's going to be $125, the call side, and approximately you're going to get a credit of 175 on the other one. And then I'm going to take 175 times 4 to get $700 for the stop loss. Is that right?
Times 5.
You'd be times it by a 5 because it's 4x net. So
4x. Okay, so times it by 5
is
4
times greater than 175.
Okay.
So you could times it by 4 and then add 175, or you could just times it by 5.
By 5. Okay, got it. Thank you very much.
Yes.
So the 7 DTE.
Yeah. And then was there any other questions on this before we move on? I know I kind of just blabbered around for like 10 minutes.
I'll look at the chart.
Yes. Mark, I just have two little technical questions, please.
Yeah.
On the entry, the last line, VIX O/N moved down. What does that mean? And
so that
my second one is on the exits, it says intra-minute SLNBBO only. What's that mean?
Yeah, I should have explained the terminology. Okay, so this is what's called a filter. So you're basically filtering out some conditions. There's what's called what I would call like curve fitting, which is filtering out like the sky's blue, some star patterns in the sky.
Yeah, I understand their filters, but what does it they mean?
This means I've turned on
O/N.
Yeah, so I've turned on the filter, and I've turned on the filter of the VIX moving down from basically the close the prior day. So basically what this means in very short layman's terms, like, did the VIX open higher than it did yesterday? So if the VIX closed at 50 yesterday, and it opened at 15.2 today, that was higher. If it closed at 15 yesterday and opened at 14.9, it closed lower. I know the literature around it sounds kind of funny, but in plain terms, that's what it is. Like, if you think about it a little more critically, it's like the move of the VIX is down a maximum of nothing. So that means it
And
has to.
Okay, and you wanted it to be up for this trade.
And the theory behind that is basically the volatility risk premium is extreme. So the theory that originally came out with this is the volatility risk premium when the market is illiquid overnight is very rich because people can't get out of their orders. So that volatility does not come out over the illiquid hours of the night. The option's expiring today. It has to come out. You know what I'm saying? So usually this means maybe there's a little bad economic data, or it was just really up yesterday and the VIX had to come up. But that was the theory, and it tests significantly better. And then again, if we do the back test again, so if we were to change this to the minimum move down of 0, so this means that it has to move down something, we can see kind of what the return of this is, and it's going to be negative. So this is another good way to kind of check it to see what that is. Also, going back to the SL stands for stop loss. So that's basically give the condition to when we get out. And what NBBO means is that means the national bid best offer, which is the data of what was quoted on that trade. So
Thank you.
Yeah. And then did you have a question, Annie?
Yep. My question is, when you enter this trade, you're entering it in as an iron condor, or as you doing separate legs? Each side separate.
I prefer to do separate legs just because I find it a little easier to shop the order. I don't think it's mainly for the stop loss that I think it's definitely a no-go. So you see here, if the VIX is the other way, all of a sudden we're losing 21 grand. So this is kind of twofold, that it definitely proves that our filter works, but it also kind of shows like, we probably want to have some trades with no filter as well, like something that can go every single day because it's not exposing us to something. But this also does confirm that's a very strong proxy for selling 0 DT premium if the VIX is opening up or down, at least at the open. And also it makes sense if we theorize it. If it didn't come out overnight, it's got to come out before expiration, so it's probably good to sell.
Okay, thanks.
Wonderful. Should we do a couple more? Because I don't want some people to have to leave.
Yeah. Did you guys want to discuss any of the ones we talked about last time, or
The 7 DTE, because that's simple. And then maybe we can do a calendar or the 40 delta.
So another very simple one is this Friday 7-day to expiration put. It's great. Basically all it is at the open on Friday at 9:45, we sell a 5 delta put and we buy 50 wide, and then we're just managing that with a 5x stop loss, which if we collected $1, it would be 6 times the amount. So we'd be buying it back for 600. This is a gaudy premium capture. This isn't technically 0 DT. This is like a mechanical quasi roll. So the thing is, it's like we've put this on. If we get stopped out, we're out. We can make it stopped out on Monday. We may get stopped out on Friday or whatever. But it's like we're always putting it on. And the good part about this is we did cap that buying power. So you can see the largest loss here is only $700, where technically you have $5,000 of risk. But when the market gaps down, since you bought the vol and you sold the vol at the exact same time, that's a real hedge. Like hedging after something's gone wrong, you're using discretion. It wasn't priced the same way. But when we buy and sell the option at the same price and we're taking it off at the same price, that's really what a hedge is, because the options pricing formula is fixed. So this is a kind of interesting one. This is more like there's rich decay on the put side. It's faster towards expiration. This is really far out of the money. And we just get to put it on more. So it's got high, it's called time velocity of money. So this trade, every time you put it on, $40, and it's only using $5,000 of buying power. So you can make $40 a week trading this trade. Like, that sounds great. And this is a very easy trade. Like, you set it and you forget it. It's not complex in any way of it. Your order can just sit and tasty for the whole week, and you'll randomly hear a ding, or you'll just wake up with, I think you normally correct around $1.50. Yeah, $1.50 with this. I can kind of explain why this works if you guys want to have some more conviction on it, or if there's something in particular that maybe doesn't make sense, I can explain it a little more.
Did you say
I
you
like
have
that
any-
91.3% win rate.
Yeah, mentally, it's pretty nice. And what I also like to show with this is like, okay, obviously we had the Vixzilla recently, but you can see here from April 26th of this year through October 27, from April 26th through September 22nd of this year, which is roughly what, 8 months, we had one loss.
Excellent.
So that's pretty good. But again, this is our greed. We need to know that, you know, we're making $100 a week on wins on this, and we'll eventually be taking a $500 loss. So this isn't a trade. If you have a 50 grand account, you're going to be doing a 5 lot in, even though that would only take half your buying power. You know what I'm saying?
Have you ever checked these on the SPX?
I'm sorry, say that again.
Have you ever back tested these for the SPY as opposed to the SPX?
Yeah, the SPY, the reason I don't like it is because they're not cash settled.
Cash
So you
settled.
could potentially get it signed. I do like how on commission-free brokers you can trade it. But the thing with trading SPX is like, we're taking a maximum of $500 risk. Like, you basically have to have a 30 grand account to even trade options. So that's a very responsible amount of risk. Whereas like, you're going to reduce it to $5. You know what I'm saying? Like, we're taking risks to kind of make some capital and money in regards it. So that's why I do XPX, is because it is attainable for everyone to do with a relatively small account. And the benefits are like, the bid ask is a little tighter because it's SPX. I don't think it makes a huge difference, but getting assigned is weird. And also, I think in SPY, it, like, let's say there's an earnings announcement after the close, they can like exercise the option till 5:30 or something. So
Right.
you could expire on Friday and Jerome Powell could say something, and you could wake up with 100 shares of SPY on Monday, which I wouldn't want to happen to me, whereas that's impossible to happen in SPX.
Good point.
Yeah.
Mark, you said you had a new version of the Power Hour. Did you
Yeah,
get-
yeah. I was working on a few of them. So I like, this is a little more curve fit of a trade, but I think people will like it. It happens on average roughly once a week. So when the market has gone up 0.5% from the open. So if the market opened down -1% and it got to -0.5%, that would be up 0.5%. But if the market opened 1% and it was up 1.2%, that means it only moved 0.2% since open. So I want to clarify what that is. It's whatever the open price is, because it's the intraday move. It's not what it was from yesterday's close, which is normally what the prices are displayed at. Does that make sense to everyone?
Yep.
Okay, but basically, if the market has gone up by 0.5%, I just showed this over an hour period with every 15 minutes. You guys could just choose one of these slots based on your day or what's going on. But I wanted to show all 5 times, because since we are using a filter that only happens roughly once a week on average, happens more in a bull market, I wanted to show that it wasn't like a specific filter that didn't happen that much, and it was one time at like 12:34 or something. So this trade For every dollar you sell, you're selling a $1.25 put spread. You could do this 50 wide also. I just have it here because this is from a bigger account, so I go a little wider. So if you sold a $1.25 option with a 2x stop, so that'd be a a 375 stop loss. For every dollar you sell, you keep 41% of it. And your risk to reward is pretty damn good, where it's a 3-to-1 risk to reward. And also the great part about this trade is you're done. Maybe you're trading for 90 minutes, it happens. And the reason this trade kind of came out, and to kind of contextualize the edge of this, is the market has a positive drift, and when volatility, so when someone sells an option in the market maker needs to hedge that risk. So if you buy a call, the options dealer shorts futures to have no directional risk. But if the market goes up, volatility comes down, which means now all of a sudden the market maker doesn't have risk, which they buy back their hedge, which makes the market continue to go up. So if you've ever noticed, when the market's going down and the market's volatile, we'll get a lot of big ups and downs because the dealers are hedging into that move. And as volatility spikes, they have to hedge more. But as the market goes up, even if it doesn't move, the dealer's just like, well, we'll buy back our short future that was our hedge because volatility's gone down. And it kind of makes it much stickier. It's called gamma, the dealer's gamma. So the market just kind of sits there, or it slowly grinds up to the up. And basically what this does is, like, if the volatility's coming out, it'll continue to come out, which kind of makes the market push up. And that was kind of the theory. Towards the end of the day is generally a little more bullish. So this trade has come up. It's a little more opportunistic. A nice way to do this too is, when I wake up in the morning, I just real quick put an alert. SPX is up 0.5%. I go on about with my day. Ding, ding. I get a text, log into my app real quick, put a lot in, put the stop loss in, go about with my day. So it's kind of fun. It's like I almost find $50 in my pocket randomly. It just texts me to make it, and that's another cool way to think of it. Because, like, this is a really good trade, but we don't want to get too drunk on filter trades, because the more trades we use in a filter, the less likely that's going to happen, because this is based on prior data. Like, we are filtering out some days which could come into the data set randomly because something happened. So I don't want to push these too much, but I did want to show, kind of an other type of trade that people can do. And I think this could be a really good ROI on people's time, or maybe a good, like, mental thumbs up. So today, this would have traded. Yesterday, this would have traded. Did quite well.
So, Mark, just to be sure, you put it on. So say you get the alert, not at 1:30. You've got it obviously some other part of the day. You just put it on at that time when it's hit the 25% up.
It's specifically for these times because towards the end of the day is generally bullish. So this still does work earlier in the day, but it's not as robust of an edge. So if the market goes up 0.5% at some time in the day, it doesn't really matter when it hits it. It just matters that at 1:30, 1:45, 2, basically between 1:30 and 2:30, the market is up more than 0.5% from where it opened at. That's the main takeaway for where it's going. So you're just checking within that time frame, and you can usually tell very easily if this is a potential. And the cool thing about this trade too is, like, maybe you put one on at 1:30, and I know you guys talked about rolling or whatever, but at 2, if that one that you put on at 1:30 is now worth 10 cents, you can be like, oh, I can trade another one, and you're still trading that 41% expected value. So this is a case scenario where being up 0.5% means it continues for 0.5%, and it's still up more than 0.5% at 1:30 and 2 and 2:30. It's like, keep selling into that strength, and that's what happened yesterday. Is it went and it just kept going and kept going and kept going, and I sold all 5 of these, and I made money on all 5 of them. It was great.
Mark, are these bots that you just let run?
Personally, I use bots. I selected these ones because anyone could do them, so I want to make it attainable to everyone with how that is. I mean, if you're running, 15 trades and you're trading several hundred contracts, it's going to get really confusing real quick and probably cost you money from user error. So if you're just trading 3 or 4 of these, you definitely don't need bots. Personally, I think it's a huge benefit. Even after the beginning, if you're paying for backtesting software and a bot, maybe it costs you $100 a month. It may not pan out cost wise for you, but that opening of mental bandwidth to like not be at your computer and that you're learning, you're not necessarily trying to like make a bunch of money over the bot. I'd really encourage people to do that as well. Mentally, maybe it's for you. Personally, I have it on a virtual desktop and I can access the virtual desktop on my phone. So I run on a server. So I can access it from anywhere, which
Right.
I really like.
So,
yeah.
Yeah, so this Option Omega then does create bots. I was using Option Alpha for a while and using their bots and backtesting them. This is the same kind of thing, I take it.
So this is purely a backtesting software.
Oh, okay. This is not
Option,
bots.
yeah, you could program this into a bot, but this is specifically trying to just be a very good backtesting software rather than drumming up interest to, use the Options Alpha product. I do like Options Alpha. I like a lot of their stuff. I think they're making some improvements with SPX. I haven't looked at it for a long time just because I'm specifically doing one niche.
Yeah.
They're heading in the right direction though. This is a far superior backtesting software though.
Okay.
Yeah. Any other questions on this specific trade?
So again, you wouldn't roll, because when you say roll, I understand close one and open another. But if
So-
you would just keep adding another one, adding,
Yep.
as long as you have the capital to do so.
Correct.
Perfect.
And the main thing is really like sizing it responsibly. So if you had a 50 grand account, I would say just pick one time and be responsible with it. But I mean, if you have a big bankroll and you really think it's going up, like this is kind of where I'll kind of allow people to use discretion because it's like if you really think the market's going up today and it's hit this 0.5% filter, it's like go sell 2 lots. You know what I'm saying? It's like that's part of being a trader, but we're exercising our discretion within the confines of a data-backed approach.
Yeah.
So that is completely acceptable, in my opinion, to be the type of trader. Whereas if you're kind of sitting there and you're like, well, the VIX was down today, but I don't think the market's going to move. It's like you're now making a discretion that you're fighting uphill against something we know doesn't work, agnostic of anything else. So we want to, I think traders call it selling into strength or something. And this is kind of a way to do that responsibly. This is like having 2 beers and then planning to have a designated driver. You know what I'm saying? Like we can have fun. It's not a big deal. We're doing it responsibly. And that's what I want to impress on everyone, that it doesn't have to be so scary. And then maybe you do trade a bigger one day and it reverses and it gets you and you're just like, mentally that wasn't for me. I just want to continue to do a 1 lot, but I can already tell you mentally this is more tempting because it's really good and it doesn't happen that often. So, just curb your thoughts around what this is. But I wanted to provide kind of some really high expectancy trades that you guys could use to kind of see something a little different as well.
So I like the 3 DTE. Do you want to talk about that? Do we have time?
Yeah. The calendar or
No, the 3 DTE fly.
Oh, yes. So another one I really like
On
that
Friday, I think.
Yeah. So I got 1 DTE one too, but kind of going back to that Friday one is, so we've got a fly that can kind of be nice here. It's kind of like a high delta iron condor, but the same thing. This is kind of like an alternative to all limited open.
Okay.
So again, this actually works a little bit better. So we'll let the VIX go down to 0.5. Still, you could just do it up or down, but I just wanted to show there's more of a margin for error here, basically. And since this is one day, the nice part about this is we're opening the trade at 9:32 and we are exiting 350 because we do not want to take overnight risk. This is way too much leverage to take overnight risk. But by trading a 1 day duration, we're much less exposed to the quick little blips of basically gamma that are happening throughout the course of the day. So you can see here is this trade really doesn't have any filters. It's just don't trade it when the market's volatile. And basically, if the VIX opens up or down, we trade it when the VIX opens up. And this is one of the best risk reward trades we've seen here, 5.2 risk to reward, and you're making an average of $130 a trade, and you're only using 6 grand buying power. So this is really attractive. If you would have traded this every day in 2023, you would have done 28% return with a 2.7% drawdown, and you would have done a 14.9% return this year with a 3.4% drawdown. So this is a very, attractive trade to be trading, and it's got that 45% profit take. I'll tell you right now that if you look here, it basically just always goes to 350. It's almost always an early exit or a stop loss. So it rarely hits the profit target. Exited specific time, exited specific time, exited specific time. But the reason I wanted to bring this trade to you guys is on average, we collect $13. We'll never get all of that because these obviously don't expire and we're getting out. But you can see here that our average win is $380 and our average loss is $500. So that risk to reward has drastically changed for us. And this is a good risk buffer for exposure, basically, that if the market moves 10 points really quick, that'll stop out a 0 DT trade, but this won't stop out this. And this, the market could go up 20 points and it could slam back down 20 points. And that's exactly what we want with this. The way to almost think of this is if you've modeled it on Tasty, you see it's kind of like a tent, right? You guys have kind of seen that. So imagine the price is just moving around all day. And like if at any point during the day, it like goes back to the open 932 price and goes in the middle of the tent, boom, profit take, and you're out. So I know we've talked about rolling and stop losses and profit takes. And I just kind of wanted to relate you guys and the whole Tasty mindset as much as possible. Is like, this is a Tasty method, but we've backed it more with mechanics instead of back of the napkin rules. And this at its core is what Tasty Trade is, except a lot of the Tasty Trade rules is we've just given rules that we know can keep you out of trouble. But this is showing the mathematical base of how we're applying it. So this is the real executional portion to that. And this is, taking that trade at 45% profit, a classic Tasty thing. We've reduced our gamma risk, you know what I'm saying, by going 1 day to expiration on a 0 DT trade. We've traded delta neutral by $7 and $6 here. So this is kind of combining all those tasty-ish concepts in line, but it's really ironclad in like math. So this is kind of like a market measure, but here's a back test,
Nice.
Yeah. So I think you guys will like this trade. It does go all day, so I hope you guys aren't glued to your screen. But if you put the order in, this one's good. I wouldn't be worried about it gapping past you. And the other great part about this trade too is since it's 1 DT, again, the gamma's a lot less, is the slippage is not going to be as much. Another option too that is kind of fun on this one is, if you want, you can only manage the short leg and you can get, I call them super lottos. So, yesterday or even today, if the call got stopped out, sure, okay, whatever, you lost your $500 at your stop loss. Okay, that's not a big deal. The other thing too, when I say the stop loss here, so this is a fixed stop loss. So here, if we collected $1,200, our stop loss would be $6.50 more than the $12. So this is a fixed dollar amount. So if we collected $12 and we had a $6.50 stop loss, our stop loss would be in at $18.50. And on this one, you can see that they're not divided on either side. So in this trade in particular, we're managing the entire spread, longs and shorts, all 4 legs of the condor in one. And this is going back to showing you that like they can work, and all of these trades in mechanics do have a place, but specifically this trade, we're doing that and it does work. It just wouldn't work on the other trade. So we're just utilizing that in the same avenue. But let's say yesterday, you spent 30 cents on a call, the long call, and you're like, I'm just going to only manage the short leg. And you took the short leg off at 10:15 when it got stopped out. And then the market went up, 100 points throughout the rest of the day. And all of a sudden you were like $30 in the money on your long call that you paid 30 cents for, and you just made $3,000. I'd recommend kind of just doing that on the call side if you're going to do it, because put options generally don't pay off like that. But that's a great feeling. Whereas you put on a trade, you expect to make $100 trading, you lost $500 following your mechanics, and then you check your account at the end of the day after you're busy all day, and you're like, I made $3,000. This is great. And it actually happens in zero DTs. So I know you probably see things on Reddit where there's like gamblers that buy all these out of the money zero DT calls. Well, it's like you can mechanically trade and make money with a positive expected return strategy, and you can have a free, I call them super lottos, that you potentially bought the call at the best possible time in the last 10 years. And this is a 500 grand instrument. So every dollar goes in the money is $10 in your pocket.
Good one.
Yeah. You guys have any more questions, or you want me to show any more?
I've got one question I'll ask quickly so I don't hold up. So we're talking about taking the stop loss, but sometimes when it's got to the end of the day and we've watched it all day, we've said, okay, instead of taking the stop loss, we're going to roll it out a week. Do you ever do that? Or is it because you've got so many trades on that for you, it's simpler to just, I take the stop loss and move to the next?
Yeah. So yes and no. When you say roll it out to the next week, I think rolling is kind of a bad term, because at its core, you're closing a position and you're opening a new position. I understand you're doing it in one order, but it is a new trade. It's like just because you collected a credit or whatever's going on, that's a roll. So how I view it is I want to take the same risk every week, because I really don't know where the market's going to go, especially on such a short-term basis. So are there some times where it's the end of the week, I'm about to lose, and then like I've rolled it out to where I've sold a new option at the next week, and it just so happens to be exactly the same if I would have done a roll? Yes, that happens, but the overarching concept is like I'm just creating more occurrences and I'm taking the same risk with each occurrence. Because a lot of times when people roll, we get fixated on this thing where it's like, well, I didn't lose if it's like, no, your account is marking it like that money is not there, and now you're in a riskier position than you were that you normally traded. So that, like, I do trade some stuff. It's like, let's say I'd sell a 90 day out 10 delta put, and instead of using stop loss when it gets to 30 delta, I take off the position. So I will do stuff like that, but I encourage you more not to think of it as a roll and just, I'm going to create another occurrence. And instead of doing it instantly when you take the stop loss, you're like, well, I took the loss on Thursday, I'm just going to put it on Friday. You know what I'm saying? That's more how I think about it.
Right. No, fair enough. I guess it just, at this early stage, it felt better where you hadn't lost in our mind.
Yeah. But that's also, we can meet our mental needs in different ways. So for example, this Friday put is, you're already winning 91% of the time. So is this really going to be the one trade you choose to roll out so you can win 100% of the time? You know what I'm saying? Like, winning 100% of the time is going to cost you a boatload of money. Like, I like winning, but I like making money more. So let's take our loss and make money. And when we start to think of it as that, it's a different way. Whereas maybe another trade that I show you, like this, where is it? The 1 day Condor, this only has a 72% win. So that, you're going to be losing a lot doing it, but the risk to reward is very attractive. Like you can see here, sometimes like your max winner was $500. Like that's a lot of money to win when it's bigger than your average loss. You know what I'm saying? Or, you're making 381 bucks on an average win. So that's really nice. Those are just different trades. So when we contextualize which trade is going to meet the feeling we're seeking, rather than just chasing that dopamine rush and feeling, it can mentally make it a lot easier. And this is kind of the conviction portion. I talk about it because think about how powerful it is when, instead of trying to roll because we don't want to see a loss, we take the loss and then we trade it for 4 more weeks and we look at our trade log and we go, I made 500 bucks. And that's because you manage your risk, and it's like, that's a pretty cool feeling. We just don't pay attention to it as much. And it's part of the learning experience and really what makes you successful in options if you're trying to be a little more data driven of a trader.
It's got a real good benefit for me too, taking the stop loss way. I can get some sleep at night instead of staying up all night watching it.
Yeah. That's a huge benefit. I'm actually going to be in Australia a little bit, and I'm a little nervous if I'm going to be able to sleep.
Yeah, he's going to be.
If you're on the East Coast, it'll be fine. If you're on the West Coast like me, it's a bit more tricky.
I'll be on the East Coast, so I think hopefully I'll be fine.
I don't know. We've taken up quite a bit of his time. Did we go over the 3 DTE? That's kind of an easy one. Do you like it?
Yeah. I think one more we should look at is this. I kind of made a campaign trade. So this is entries with no filter. This is kind of like a Tammy Chanless MEIC trade. So we're trading $5 on the put side, $3 on the call side. We have a tiny stop loss of 80%. So basically, if the market's going up, you're going to make money because an 80% loss on $3 is less than the $5 on the put. You're only winning 50% of the time though, but you can see this one, no filters, no nothing, 10-15, 11-15, 115, 215, 80% stop aside. This year, if you would have traded it every day in a one lot on a 100 grand account, you would have made 17.31%, and the max loss you would have taken is minus 2.44%. So that's a pretty banging trade right here. This one is a little more involved. You're going to have to look at your computer at least 4 times to put it on. And then the strikes could get a little more confusing. When you're looking at it, you may have to have a piece of paper around your desk. So this is why I didn't want to push it too much. This is maybe a little more of an automation trade. But if you look at that P&L line, that's about as good as it gets. It kind of looks, if you guys have ever helped your kids out with math, it looks like the hypotenuse. A squared plus B squared equals 45-degree P&L line. And this is a little bit different thought of it, because mentally, for some people, this could be really tough because you lose half the time, which I know is a crazy concept to wrap your head around, and you're only keeping 7% of the premium that you sell. And with this trade too, like I've modeled in, I think an average of 30-cent slippage, which is very accurate from actual trading I've done on it. However, you'll take like 60-cent slippage a couple days. So that can be kind of frustrating. Just know that after you've done 100 or 200 trades, you'll get a bunch of 10-cent slippages, you'll get some 30-cent slippages, and vice versa. So that will even out. But mentally, I see people really struggle with this, or they'll double down because they think they know it. It's like, this is a coin flip. It's got a 50% chance of winning. You have no idea what this is doing, no matter what market condition. You know what I'm saying? Like if you enter it and the SPX goes down 4 points the second after you enter, this could get stopped, which could also be very mentally difficult. So this is the majority of stuff I trade, because you're just creating a massive amount of occurrences. So since 2020, this has traded almost 8,000 trades, which is kind of nuts to wrap your head around. But last month, I traded 30,000 contracts of SPX to kind of put you in perspective. So this isn't for everyone, but this is the type of trade that I love. Like I couldn't even tell you which days this makes money on. It literally makes no sense. It's random. Like there could be days where it trends up all day and all your puts lost and your calls won. It's just because it's just such a small area of time with it. But personally, I kind of like this one for people to run if you're really trying to run income. It does take an incredible amount of patience and a little more time with doing it. So this is like the exact opposite of your 90% type win trades. But this is kind of one, it's like you got to do what works for you. It's like, I like these types of trades. They're boring, and they work, but the path to that P&L is not exciting.
It's not my cup of tea. So can we do the 3 DTE now?
Yeah.
We'll let you go.
That specific back test here.
You do it a couple of hours before the markets close, and you exit the same day.
This one saved for you guys here.
It's called Iron Fly.
Did I send that to you?
Well, I can share it with the others if you can't find
Yeah,
it.
you just want to, you can just share that with your group. I wish I had it on here. I must still.
Yeah. You do it a couple of hours before the market closes. Sally, is it about 2 hours before? I can share it. Don't worry about it. Yeah.
Yeah. And then did you guys have any other questions, or kind of what were your thoughts on 0 DTE from today? Does it feel good? Do you believe you can also experience success now?
I don't know. Sally?
I've found that the more we've practiced, the more confident I'm getting by heaps. The first few, I must admit, I'm still a long way from, I still keep taking them off if they're in profit. So I'm going to try and stop doing that because, we're so used to flip. We finally got a profit. Let's grab it, thief in the night and run. But it's been amazing. I feel like the amount we've learned and starting to get some really good profitability in the last month is fabulous.
Yeah, we're ahead. We're ahead. We've been doing the calendars, the all-in-one. Yeah.
And another good way to think of it too is like, if you really like taking profit takes, if it enables you to do the rest of your portfolio, I would love for you to just have one trade that you just always discretionally profit take on if you'd like. That's 0 DT. Like, go for it. You know what I'm saying? Because it's like, just by doing that trade that may not make sense, but mentally it works in your portfolio, so you can execute everything else or have fun and like think you know where the market's going. It's like, that's great, but like, let's just not mix those two things over. It's like, if you've got kids, it's like sometimes you like to give them the best day ever and you like spoil them, and grandma comes to town and she buys them a bunch of candy, and that's how it happens. But it's like, you can't have grandma buy him a bunch of candy every day, because that won't be good for him. So like, let's make sure we have our core, and then like we can have our one trade where grandma buys a bunch of candy for him and it's a blast and that's the best day ever. But that's what really makes the whole system together and builds the conviction of continue going this. And the more honest we are with ourselves, that it's like, I don't know anything, but mentally I like to feel like it. And those are just two, separated things. Or I want to just experiment on something that's not back tested because I'm curious. And it's like, that's great. And you may come up with something really cool. Like, I actually have 5% of my account, and I'll risk up to 1/4% a day on what I just call experiments. And it's just things I'm trying out and looking at, because that's what keeps me engaged and excited, and honestly develops a lot of cool trades that you see here.
Yeah. Well, I'm a believer. So, and Carolyn couldn't join us, and but she is too. So that's wonderful. I don't see any more questions. And Mark, do you want to share an email or with the ladies here if they would like to contact you? What's the best way to do it?
Yeah, you can email me at Mark Anderson at MBH Capital Management. But if you want to add me to the WhatsApp group, I think that's fine because I know you text me. It wouldn't be like
Oh, yeah, you don't mind? You don't
yeah,
mind?
I mean,
Oh,
I'll have it on mute probably, so I'm not going to be super
that's
active in it.
fine.
But
Okay.
yeah, when I check it, like I look at WhatsApp. Now I'm overseas, I'll actually probably look at it every day. But I usually
Yeah.
look at WhatsApp like once or twice a week. So if you have an at in there, I'll find it when I'm
Oh,
in
that's
there.
wonderful. Thank you.
Yeah.
That would be great. Yeah. We have one person who is a VIX watcher, VIX. And so she gives us the heads up. It's a go or a no go. And
Yeah.
so it's just been so great. And I just had a couple of other ladies ask. So yeah, I will add you
Yeah.
too.
I think it'd be cool. I'll tell you what, I'll move some money over and I'll start like I imagine most of you guys are probably running a 50 grand account or that's what we've allocated. So I'll start a little 50 grand account and probably, I can export a trade log for you guys too. So I could be like, hey, by the way, following the mechanics here, how we're doing. So I could kind of be the baseline of it as well.
Oh, that's great. Will you open it at
Yes.
10?
Yeah, I think I'm due to open it at Tasty.
Well, let me send
Yeah,
you the link to join.
yeah,
So I can
send me
credit.
the link to get so yeah, whatever your pearl, yeah, just email
Yeah.
it to me.
Yeah. Oh my God, this is going to be
Yes.
fun. Jenny was going to join us of Liz and Jenny, but again, she got called out for a family thing, but I'm going to share the video with her. So
Yeah.
thank you. Does anyone have any more
Excellent.
questions?
Yeah,
Otherwise,
I was just going to say, Mark, I really like the Power Hour. So it's definitely one of my favorite, although it has given us a bit of jip at times. It's short and sweet.
Yeah, that's where it's at. I was actually the reason I started doing it because I was working a day job and that was lunch. So I could like trade at lunch and still work my day job. So it came out of necessity, but that's actually my favorite time. And theoretically, the reason Power Hour is so great is because people have to close out orders at the end of the day. So there's less sellers than buyers because just for margin provisions, people can't hold their orders out. So it kind of bids the vol up a little bit. I'll actually show you one that I really like. So I call this one the limit down put. So does anyone know what the limit down rule is? -7% market pauses, -15 market pauses. You guys heard of that?
no, I haven't.
So there's market circuit breakers. If the market goes down by 7%, only
Mhm.
closing orders are allowed to be placed for, 15 minutes and it opens back up. Goes to 15%, market pause for 15 minutes, goes down 20% pause for the day. So that ceases to exist at 325 every day. Who knew? But that's what happens. So you could test this same exact mechanic at 320, at 315, at 3 o'clock. It doesn't work that well. But right at 325, when that circuit breaker no longer goes into play, there's like a big spike of basically edge and volatility risk premium. So what I do is every day at 325, I sell a dollar put and I manage it with a 2x stop loss. And you can see that over the last 5 years, it's very, very consistent. It has a great return. And mentally, you'll basically know if this won within 10 minutes or 15 minutes. So if you're kind of like a worry, wart, stressful person, this, you can still show up very good for your family and everyone else in your life by trading this one because you only got to be nervous for like 15 minutes. What I used to like to do is I would put it on, I'd triple check to make sure my stop loss was in, and then I'd like take my dog out for a walk for 15 minutes and I'd get back and I'd see if I won or not. And that's kind of, a more productive way to go about it. But again, Edge was limit down rule expires at 325 till 4 p.m. I wonder if there's more volatility edge there. Lo and behold, there is. So kind of interesting concepts with that. And the other great part about this is like this is going to be super uncorrelated to all ended open because all in it open has been on for 6 hours. So it's definitely stop lost or expired basically at this point. And the other great part about this is, look, no filters, just the time. So we could trade this every single day. And we're still good. We're never trying to guess with this. We're just purely playing that limit down's gone. People have taken off more exposure, that they're trying to close positions because they can't hold them overnight. And there's more edge for basically us as option sellers to sell heightened premium. This is kind of funny that it's like, it's such a small niche and such a small rule. I don't even think people, professionals know about this, but the data backs it. And you can look up the rule on the CBO website that the limit down expires, and we got a cool trade name.
But this is 100 points wide.
So I just kind of have that fictitiously,
Yeah.
but the real concept that I like to put in, it depends on volatility, is
Get the
so
dollar.
if you buy a 5-cent long,
Right.
you're synthetically naked. So if we think volatility is overpriced, we don't want to buy a 20-cent long, because then we're just buying more of what we think is expensive. So in the last half hour of the day, normally it's 50 wide, depending on the VIX. So I mean, I could redo this test, but you could see here, these are all 5, 5, 5, 5, 5. Like, the concept is that we're trying to do that $5 wide wing. And it's like, it's only you have a stop loss in, it's not gonna, change anything. And this one, you're definitely only managing the short. I want to put that out too, because your long is going to be worthless.
You're
Basically,
only trying to collect a dollar.
Yep.
Yep. Okay, got it.
And then only manage the short, because in the last half hour, slippage is much worse because gamma's higher. So, and also, so shopping a 2-legged order is a big no-no. And shopping a limit order, like, market that thing, get out. You know what I'm saying? So this is just kind of a pretty solid concept and trade that is worth trading, and it's good. But we got to make sure our mechanics and intricacies are in line. And this is only managing the short. We really want to try and buy that 5-cent option or 10-cent option at the max. And then if we were trading other stuff, maybe we already have like a wing, sitting out
We
there.
could use, right.
Yeah.
Sounds good. Well, thank you so much, Mark. You give us a lot of your time, and thank you, ladies. And then we can talk among ourselves on the group, or if you want to join the WhatsApp group, just send me a message directly. I got some messages, but others can too. Wonderful. Thank you.
All right. Thank you. I'll talk to you guys later.
Bye.
Thank you, Mark.
Yeah.
Yeah.
Thank you.
Oh, that's
Yes.
exciting that he wants to join. I can't believe it. He wants to be in our WhatsApp group.
Thank you.
He has no idea what he committed to.
I still have a hard time with the whole stop loss thing. I don't understand how to do that on the
Yeah,
Tasty Trade app.
okay, Annie, if it says 400%, that just means multiply the credit you collected by 5. If it says 700%, multiplied by 8.
Yeah, but I'm not talking about that. I'm talking about how you physically do it on the Tasty Trade platform.
So
I get so confused
there are
on
some
how to do that.
videos. If you go to help and you put in stop limit, there's literally a video that shows you how to do it. And if that doesn't help, so correct me if I'm wrong, Sally, if we want to say it's $700, the stop limit, then and then there's another trigger. There are 2 numbers you have to, but don't take my word for this. Go look at the video yourself. I put in the trigger at a nickel above, right? 705. But again, like I said, don't take my, or call support at Tasty and literally tell them, this is what I need to accomplish. What is the best way to do it?
Yeah, they've been great. Tech support's been really good.
Yeah, they are. They're very good about it. That's it.
Okay.
So,
well, thanks.
Sorry.
I was going to say that was fantastic again. Mark has got some seriously good stuff, hasn't he?
He does. I think because this is my second round with him, and I promised myself that I would do it for 3 months, but religiously, and at times I saw myself falling, just not following the rules, so to speak, right? But I vow to myself now that I'm really going to stick to the rules. The 2 rules, one is the VIX rule. If the VIX is not higher, I'm not doing it. It seems, it just causes a headache, and why bother, right? Because these are time-tested techniques. Second, I'm not going to, I've been guilty of rolling because I hate that stop loss. But if you think about it mathematically, it's better to take the loss and you're done with that day than start a whole new position with the right risk parameters the next day. You certainly can't roll to the 5 or 7 delta for the next day and collect any kind of credit, right? So it becomes a whole different trade. And my account is full of 3 or 4 of these that I've rolled in this month of September. And hopefully, and then I've sold calls against them, and hopefully I can, bring in or make it profitable. But from this day forward, when I'm doing marks, I'm not going to roll. I'm going to put the stop loss in and take it, and then start again the next day, and then keep track. So I have a month now of numbers, and I'm going to do another month of numbers. And
Yeah, you're right, Fauzia. It works if we taking the stop loss works if we do more than just 1 or 2 every now and again. If we're doing them every day, then the numbers start to come up correctly. That we've taken a loss, but we're going to have 3 or 4 wins.
We
Whereas
try
if we're
them
just doing it intermittently, it won't.
Yeah. Well, we can't force it every day if the VIX condition is not true. So it's more about doing it 5 times 52 weeks rather than, just a few. And I'm still ahead. I'm still ahead because in the first few weeks, we were making $300 a day, $300 a day. And then I got stopped out once, and then thought I was smarter than him. Oh, I'm just going to roll, but I'm not going to do that anymore. Yeah.
And so can I ask, we're watching the VIX ticker, right? So I've got the tasty trade open. So like the VIX closed, let's see, 17.69 today.
I don't know. I'm not looking at it. Yeah.
So if I take today's close and just like write that down now, do I look at 9:15 tomorrow, or do I wait until 9:30 to look at it? Because he said that
9:30 after the markets open. Not after
Okay.
VIX opens, but after the markets open. And then he gives us a 2-minute period to let the market sort of settle down. Yeah, because there's a lot of, the bid and ask is not narrow. And so Carolyn has very nicely volunteered in our WhatsApp group. So every morning before the markets open, she tells us where it closed. And then once the markets open, she tells us where it's opening. And then we're on our own. And it's all voluntary. So we report, I got in, these are my shorts, and that's it. And it's been fun. Yeah.
So what kind of profits are you making? You trying to make like when I did some back and forth with Mark, he was saying that the whole idea is to try to get it so that it expires, worthless. So you collect the entire premium.
Right.
So yeah,
that's $300 a day if you don't get stopped out. Right.
If you don't get stopped out, or like I've been doing the 7-day puts where you just, but I have a real hard time with 50 wide 50 wide points. Just makes me extremely nervous. So I was doing it with 25 point wide, and I was taking in around $100 I was doing
But
until
it's
Monday.
entirely up to you, but I
Yeah.
think the 50 wide just because the further away the longest, quicker it's going to come in, right? So the 7 DTE, the other strategies don't hold $5,000 buying power overnight. You know, they don't. You either get stopped out or it expires, right? And so the 7 DTE, yes, it holds it overnight. And in our notes, it says that if you've got an all-in-one going, if you've got a 7 DTE, then don't open another one that same Friday, because then you're doubling up on your buying power unless your account can hold it. No big deal. Sometimes the calendars, he says you can do too. He gave us those strategies for a smaller account.
Yeah.
The 3 DTE is 100 points wide because it's a fly. But just remember, Annie, you've been doing this forever. It's only for a few hours, right?
I know, but that's the other part that drives me crazy because I can't sit in front of the computer all day long.
No, you
So
don't have to. You open it and you put your good till canceled order.
yeah, well, that's what I was trying to understand with the Tasty Trade with that whole bracket order where
No,
you can
there's
go.
no bracket orders here. No.
Well, they do that where you could put it in so that you say you want a certain profit amount, and then if that doesn't hit, then the stop loss, and they have a trailing stop and all that kind of stuff.
Right.
It gets really crazy and really
Yeah.
complicated.
I think what he said is what I would believe, that keep it simple. Just keep it
Yeah.
simple, right? Yeah, don't complicate your life.
Yeah.
And
Okay. So I just have to be one of those traders who's not on the ledge.
no,
I did.
you have to also get that out of your head that I'm on the list. If you agree with the numbers, and it's not just his numbers, you can back test it yourself, right? So I'm just going on faith that I'm taking his numbers to be valid. But you can certainly get back testing tools and do them. Go ahead, Sally.
Sorry, I was just going to say, and I don't know what you think about this, Fauzia, but for the very first couple that I tried to copy, well before Mark, I just did them in my pretend account, and then I was able to watch them without actually having the money at risk, just to get a little bit more comfortable. Then after I'd done one or two of those, then I started to do. But I don't know whether that works for everybody, but I definitely found it when I was really nervous about the first one or two. That did help me.
Good suggestion.
Yeah.
So I made a note that he said that the VIX usually opens down on Fridays. Was he saying that was favorable or not favorable
Not
for?
favorable, no.
Okay.
Not for the all-in at open, AIA.
Okay.
Not for that one, but it might be, if that's not a restriction on the other strategies, then, if you give me your email address, Lisa, I can put you in I can share the Google spreadsheet with you. We'll have to update it with these new strategies he talked about, but at least for now, you can share those others. So what is your email address?
It's Lisa T 2969@gmail.com.
Okay, perfect. Okay.
Can you send it to me too?
Yeah, give me your email address.
CINDI
Mhm.
47@gmail.com.
Cindy47@gmail. Yeah, sure.
So Fauzia, the 40 Delta 2:45 p.m. Is that an iron condor or is that an iron fly? Because
It's an iron condor, $10 wide at the 40 delta put and the 40.
Okay. Which one's the iron? Oh, so the 3-day. I see that. The 3-day.
3-day is like
Yeah.
2 hours before, is it? The market.
It's 2:30 p.m. to, yeah. And what I did is I kind of took your information. I created my own spreadsheet because one of the things that was getting confusing for me was the times.
Yeah.
So I put in my times so that way
That's
I
fine.
know. Yeah, that made it a little
I
easier.
had put in my time earlier, Pacific/East Coast, but then it was getting really confusing. And all of his videos refer to East Coast. So I just
Yeah,
learned to make it EST, and that's okay.
yeah.
But I think that's the 3 DTE is done about, is it an hour and a half before the market?
Well, the markets on the East Coast, they close at 4:30 on
4
the East,
Or
four,
yeah.
so 2:30 would be,
hour and a half.
Hour and a
yeah,
half.
yeah.
That's what I remember. So you open it 3 days out, but then he showed us a new one today, 1 day out. But you
Yeah.
close it the same day, so you're not holding that buying power over the weekend. And it's
Right.
just that last 2 hour and a half of theta decay just comes in.
Yeah. Yeah, I got that 3-day. Yep, I got it.
Yeah.
Okay.
Fauzia, do you post your zero DTEs, all these trades, do you post it on the follow page at Tasty?
Oh, God, no.
Does Shark Jeeve do these? Because if I'm saying his name right, because I feel he does a lot of zero DTEs, and I feel like Shark Jeeve.
Chief, oh, we can post whatever we feel like. I'm not going to post those because people will follow you and they don't know half of the considerations, and then the market moves fast. And I post very conservative things on the follow page.
And I have a hard time following you.
They're only from one account. Like today for earnings, I did, what was it? What was it? What had earnings today?
Adobe. I don't know
Adobe,
whether you did
and
that.
the
I was
other
asleep.
one was Restoration Hardware. I did both, but I only posted one because Restoration Hardware is kind of wonky and it's got wide strikes but I'll do them for myself, but I'm not going to post it. No, they're not posted.
Can you tell us Mike's email again? I didn't get it.
I think he said Mark Anderson,
It was like NB something.
at mbhcapital.com. You'll have to just send
At
me
mbh.
or send me an email and I'll forward it to
.com.
you. I don't know it off the top of my head.
Yeah. No, sorry, I
Also
didn't quite catch
contact
it.
him when you watch his videos.
Yeah.
On the specific subject. You can just send a comment there too, and he will answer. And so will the rest of whoever's watching. It's nice to share to see what concerns other people have. Yep. All right, ladies, I'm gonna
Yeah,
go.
I gotta go.
All
Bye,
right,
ladies.
thanks so much.
Fabulous.
Bye,
Thank you.
everybody.
Thank you very
Thank
much.
you.
Bye.
Thank you.
Bye.